Well, basically, Haslinda, they're a form of protection that investors can buy to speculate on whether they think a government or a company's debt, for that matter.
Indonesia's largest company, once a behemoth of industry in prosperity, had fallen into a state of ruin. For years, the company boasted immense success, but now fell almost to the ground due to an overwhelming amount of debt. The depths of their financial crisis were far-reaching and had a devastating impact on the country as a whole. The future of this once renowned giant was uncertain. Its fate hung in the balance between recovery and complete collapse. What went wrong? How did AP acquire this much debt? What were the consequences? What is the business sector of Indonesia like? Let's dive in. The largest bond default in corporate Asia occurred in 2001, when Asia Pulp and Paper, one of the world's 10 largest pulp processing and paper manufacturing companies, fell behind on its debt. This was the biggest case of this kind in corporate Asia, and it caused a collapse in trust and in the prices of assets in Southeast Asia and Indonesia. In the early years of the new millennium, many were surprised, considering the reputation of the management owners, which included the well-connected Wijaya clan, owners of Indonesia's third biggest conglomerate Sinar Mas, and the investors engaged in the previous bond transactions, which were major Wall Street firms such as JP Morgan and Goldman Sachs. The Asia Pulp and Paper situation was a textbook example of using excessive borrowing to finance development. The Wijayas first obtained cash on the Jakarta stock market to finance local development in the early 1990s, but by the mid-1990s, they had chosen to pursue an ambitious expansion plan to transform their pulp and paper business into a genuine global player. That required billions of dollars to finance this growth. In 1994, Asia Pulp and Paper consolidated its activities and relocated its headquarters from Indonesia to Singapore, for the simple reason that if one portrays oneself as Indonesian, money costs a lot more than it does for a Singaporean. With the help of eager Wall Street investment banks and a story that sold with investors, the company was a blue chip in an emerging market, had a competitive advantage in fast-growing Indonesian hardwood, and was profitable despite operating in low-cost Indonesia, while collecting revenue in dependable U.S. currency. The company also issued billions of dollars worth of bonds beginning in 1994. Another victory for the firm was when its American Depository Receipts, or ADRs, were listed on the New York Stock Exchange in 1995. Although warning signs had been present for some time, the effects were not seen until the recession of 2001. The firm used the cash to greatly increase its production and marketing efforts in Indonesia, China, and India. It did so at the expense of very high borrowing charges. The firm spent $448 million on interest in 1995. Interest payments reached $650 million per year by 1999. In that year, the firm's losses totaled $23 million. From 1996 to 1998, the average interest coverage for APP was just 1.5, which is much lower than the average for A-rated loan issuers in the worldwide pulp and paper sector. That meant the company only made 1.5 times as much money as it needed to cover expenses. S&P assigned a B+ rating to AP notes in February 1997. They had dropped to the junk bond category by May of that year. Although the company performed relatively well during the Asian financial crisis, the collapse of confidence in Asian assets must have drained liquidity from Asian markets, making debt refinancing for APP more expensive. In fact, by the year 2000, AP had attracted investors with the promise of a 17% bond return for its China business and a further 30% yield in a private placement. The company's debt-related cash flow problems were made worse in 2000 and won by imprudent operations in China, where APP's paper proved to be too luxurious for the China market's demand for simple low-grade paper, and then by a 50% drop in paper prices in just a few months from 2000 to 2001, when the corporation declared a debt moratorium all by itself. In March 2001, it was just a matter of time until it stopped paying its bills. AP's debt at that point was a whopping $13 billion. Skeptical investors, mostly fund managers who had bought into AP's bonds earlier, asked the Wijayas where all the money had gone, which was understandable given the size of the funds raised and the fact that Sinar Mas' other operations had suffered greatly from the Asian financial crisis and needed funds badly. Separate auditors for APP and the creditors conducted an investigation that uncovered $5 billion in questionable transactions and balance sheet entries made by AP's Indonesian subsidiaries in prior years, including provisions for receivables and doubtful debts and reported derivative losses. Though one could probably deduce with a high degree of probability, the lack of official follow-up action to trace the route back to where all this money ended up is quite surprising. As a result of negotiations between AP and its creditors, AP had agreed to repay over $7 billion to its creditors over a period of 10 years, thereby resolving the debt problem related to its Indonesian companies. Its non-Indonesian affiliates' debt was not included in the settlement. The AP ADRs had long been delisted from the NYSE. It had plummeted to 20 cents in 2001 when it proclaimed the moratorium from an IPO price of $11 in 1995. The Wijaya family, the company's ultimate owners, did not have to put up any collateral or inject any funds to keep AP afloat throughout the debt restructuring process. After all had happened, the family and their friends were still in charge of day-to-day operations. Investors in both bonds and American depository receipts were hit hard by the company's decision to delist from the New York Stock Exchange, with bondholders taking losses of up to 50% and ADR holders losing even more, respectively. If you're wondering why Golden Agro-Resources or Asia Food and Properties are trading so far below their NTA, despite having substantial revenues and making good reported operational profits, look no further than their ownership. They're both subsidiaries of Sinar Mas. Investors, do not forget quickly. If you fool me once, shame on you. Fool me again, shame on me. The business sector of Indonesia. A dynamic and growing business community makes Indonesia home to one of Southeast Asia's biggest and most distinct economies. There is a wide range of potential markets in Indonesia, from more established ones like agriculture and mining to more modern ones like technology and e-commerce. The development of Indonesia's digital economy is seen as one of the country's most potential growth sectors. There are a lot of individuals in the nation who use the internet, and that number is only expected to expand with the country's increasing population. E-commerce sites like Tokopedia and Bukalapak and ride-hailing apps like Gojek and Grab have benefited greatly from this trend. The potential for digital enterprises to flourish is nearly infinite as the number of internet users in Indonesia continues to rise. The manufacturing industry is also very important to Indonesia's economy. The nation has a long history of manufacturing textiles, furniture, and automobile components, and it is rapidly rising to prominence as a worldwide powerhouse in this sector. Reasons for this include the fact that international investors find Indonesia's cheap labor costs and wealth of natural resources appealing. Manufacturing is expected to continue expanding in the next few years as a result of the government's focus on industrialization and infrastructural development. Naturally, the wealth of Indonesia's natural resources must be included in any assessment of the country's economy. Indonesia has huge deposits of coal, gold, and other minerals, in addition to being the world's biggest producer of palm oil. Despite the fact that the extractive industries in Indonesia have been plagued by their fair share of environmental and social problems, they continue to play a vital role in the country's economy and provide jobs for millions of people. SMEs also play a crucial part in Indonesia's economy and must not be overlooked. These corporations drive the bulk of the country's economic activity and generate the vast majority of new jobs. Small and medium-sized enterprises in Indonesia, ranging from family-owned food stalls to digital startups, are a reflection of the country's entrepreneurial spirit and innovative nature. The business community in Indonesia is exciting, innovative, and ripe with possibilities. There's room for everyone, from solo business owners to huge companies, and everyone can leave their mark on this dynamic industry. Indonesia is also well-positioned to continue its climb as one of the world's most dynamic economies, thanks to its government's encouragement, its highly skilled labor force, and its vibrant digital environment. However, despite the numerous success opportunities, the Indonesian business sector also has its own set of problems. Inadequacies in infrastructure, corruption, and a complex regulatory framework all fall under this category. The government has taken measures to address these issues, including investing in transportation and communications infrastructure and implementing policies to simplify business registration and licensing procedures. The future of Indonesia's corporate sector looks bright thanks to the government's continuing backing and the country's rapidly expanding middle class. New opportunities will arise as the economy continues to develop and expand, making Indonesia a desirable location for business owners and investors. That's all for today, guys. If you like this video, be sure to hit that like button, subscribe to the channel, and press the bell icon for any new updates. See you in the next one.